Good afternoon. Thank you for joining today. So we heard from the first panel on how do we got here, and this panel is all about how do we move successfully. And this is all about how the private sector relates to climate-related migration. So we'll hear from 5 experts. They're going to come up here and do a short presentation. Then we'll do a moderator Q&A, and then we'll move on to questions. My name is Monika Serrano. I lead the resilience program for Turner Construction Company, the largest construction management company in the US, and we have some international presence as well. And my role is mostly about making our job sites more resilient, as well as the buildings that we build for our clients. So with that, we'll move on to our first presenter, Carolyn Kousky.
Great. Hi, everyone. It's wonderful to be here with everyone this week. I'm Carolyn Kousky. I'm the Associate Vice President for Economics and Policy at the Environmental Defense Fund. For those of you who were in the room for the last panel, we heard a lot about some of the challenges with insurance right now, crises of insurability, lack of affordability. And I'm going to talk about a much narrower slice of the insurance puzzle that's more about how insurance can be a part of the solution. And I think the last panel mentioned that a lot of the dynamics right now are driving unmanaged retreat. How can we use insurance as a tool for managed retreat is what I want to talk about for our few minutes here. So the kind of context here, right, is that these large climate extremes destroy a lot of property, and that while creating enormous challenges for households and communities in terms of recovery and long-term financial impacts, which is a bunch of the work we do, also creates this opportunity to do things differently going forward. And when we're rebuilding and replacing that capital, how can we make sure that we're incorporating resilience into that building and also rethinking even where that building is located? So can insurance help make that more possible? And right now, there's several challenges to using insurance as a tool in this way. So the first one is that insurance proceeds tend to be limited in contractual ways to rebuilding exactly what you have, exactly where it was. And part of that are terms designed to prevent fraud, right? And to make sure that money is not used inappropriately. We see this in our disaster aid programs too, but it also then limits flexibility to think about doing things differently. The second challenge we see is that if you have a mortgage, your insurance payout goes to your lender and to you. And the lender often will put the money in escrow and then give you payouts as you're rebuilding. So it's not your own independent decision what to do with it. And lots of times lenders want to use that money to rebuild their collateral, making it a trickier negotiation. Although technically, they can't keep more than the value of the loan. So assuming you have greater damage than your loan, you should be able to take the extra. So there's been a couple attempts at trying to open up flexibility for people who want to voluntarily relocate after a severe disaster. The first are what are called cash out riders. We tend to see these on very comprehensive insurance policies that tend to be held by more affluent households with high valued homes that have insurance contracts with lots of bells and whistles on them, including the ability to just take the cash and leave if they want to. Since 2018, the state of California, responding to the severe wildfires and people wanting to relocate after losing their entire home, has granted explicit legal permission that policyholders are entitled to take all of the dollars owed to them for rebuilding, every last one, even if you have riders for other types of things like temporary lodging or whatever it might be. You're entitled to take all those dollars and use them to either build somewhere else or to purchase a new home somewhere else. So you don't have to rebuild what you had where it was, with the caveat that insurance law requires that insurance can only indemnify you. It can compensate for a loss. You're not allowed to make money off insurance. So if your new construction or the home you want to move into is less, you can't pocket the difference. You have to give the difference back to the insurance company. So these are starting to pave the way to allow people to have flexibility to move somewhere else following a severe disaster. But there's still some challenges to solve for here that I think are both related to who owns the land next. And so the first question is, does this flexibility give the existing policyholder enough funds to pay off the mortgage and move somewhere safer? That's going to depend a lot on local housing markets and the dynamic and the terms of their insurance policy, but also who they end up selling that land to and how much money they get for it, right? And the second question is, this allows flexibility for the person who suffered the damage so that they can relocate if they want to. They can retreat at that moment from the high risk area, but it doesn't prevent other people from just moving in and from having redevelopment or more people being put at risk. So it doesn't help solve for community resilience or risk reduction. And so what you have to do then institutionally is couple the financing tool that the insurance has to something like a buyout program that can then put that land into open space or other uses apart from development. Now, if you can do that linking, the nice thing about this tool is that it frees up limited buyout dollars, because then you don't have to be paying the pre-disaster value of a home anymore. You can just be paying for the land because the homeowner has gotten that extra payout from being able to use their insurance. So it should allow limited buyout dollars to go much farther. But the institutional challenge of linking those has still not been solved yet anywhere that I'm aware of. So there's still more to do. The last point I wanted to just briefly mention and not talk as much about, since this was on the kind of narrow slice there of using it for relocation, is the topic that came up in the earlier one, which is insurance is also driving retreat sort of indirectly through pricing signals and availability, as we heard Liz and Haley talking about. And I just wanted to flag two issues for thinking about them, and they started to come up on the last panel too. The first is the issues of equity that raises, because if you have people who are pre-existing in areas as the risk has been going up and they face these sudden changes in pricing or availability, they can be trapped there and not have access to being able to move to safe areas. But the second one is really the limitations of using insurance as our strategy for getting information into markets, because insurance only prices for this year's risk. So it's not going to be a tool that's going to be projecting into markets how risk is changing into the future, and we need other tools to do that. Okay, that's it. Look forward to the conversation. Next.
Hi, everyone. I'm Hannah Teicher. I'm an assistant professor of urban planning at the Harvard Graduate School of Design. And I'm really excited to be here today to have this conversation across academia and practice and across sectors and get at, I think, some pretty thorny issues. So I'm addressing this from an urban planning perspective and really trying to understand what it means to have receiving communities. So in the media, you might hear the term climate haven or climate refuge, and it kind of evokes a place that's, completely free of risk. There's no drought, there's no fires, there's no flooding. It's got sunny days, abundant fresh water, but obviously that is very simplistic. And there are a lot of political and economic dimensions to what would actually make a receiving community. So we also might think that receiving communities are a new phenomenon, but really there's so much to learn from in related things that we've experienced in the past. So this is both immigrant integration and amenity migration. So in a recent paper that I wrote with Patrick Marchman, we tried to synthesize lessons from that other analogous experience to say, what can we learn and apply for receiving communities? And so one framework that we provide here is a way to think about how receiving communities map onto urban growth and shrinkage. So you have everything from, the large urban to the small rural places, the shrinking and the growing places. So one place that we're starting to see this talk about climate havens is in the so-called legacy cities, places that have deindustrialized. And this is largely because they actually see positioning themselves as a climate haven as an economic development opportunity. And this would also be the case for disinvested rural interiors. On the other hand, there are growing places, inland gateways, places like Denver or Chicago or Toronto, that have seen continuous migration, and they might also see climate migration, but that will only be one small piece of the pie. And then there are the rural gateways. These are amenity destinations, whether in Vermont or in the Rocky Mountains, small towns that people want to flock to for their lifestyle. And certainly people will continue to move there. So this is, what one way of just laying out the kind of landscape of places that we may see as receiving communities, which is much more complicated than the kind of hype that we see in the media. So now if you zoom into the neighborhood scale, this is also much more complex than you might imagine. So we have everything from the voluntary migrants, the people who have the wherewithal to think about this proactively. Maybe they've experienced some climate impact. They've lived through a smoky summer in the Pacific Northwest and they want to get away from it. But then you also have a lot of involuntary migrants, people who have been displaced by disasters and have to move somewhere else. But now we may see increasingly that both of these types of migrants are going to be converging in the same places. And so what will happen when they arrive there? And these places that they arrive in are not a blank slate. They're places that have been shaped by histories of segregation and disinvestment and gentrification. And so when you have people moving into those places, we can't just look at, oh, there's general vacancy, there are vacant lots, there are vacant houses, there's infrastructural capacity. We have to look at this at a block and a building level and think about what it will mean when people actually move into those places, what additional displacement or gentrification it will cause in places that have been historically disinvested. So from our synthesis, we draw out three main lessons that all point to the fact that it is not migration itself, but integration into the new place that really serves as adaptation. And so there are three things that I want to highlight. First, the need to reconcile economic development and social inclusion, because there's a real risk of places adopting a kind of conditional welcoming perspective where they really only want migrants as long as they're a vehicle for economic development. And if they don't deliver, they're not going to be welcome anymore. Also, the need to address the distinct needs of newcomers and the enhanced needs of current residents that may result from those newcomers coming in. And finally, planning for deconcentration and a shifting urban hierarchy. So if we look out, 10 or 20 years in terms of what these population shifts might mean, we might see that the kind of urban centers of gravity are really shifting from the coasts inland, whether that's into the interior of the continent or just a little bit inland within a state. And so based on all of this, we suggest that there are some qualities of effective receiving communities to pay attention to. You might first go to the sense of physical habitability, but that is only a foundation. It's a necessary but insufficient condition. So on top of that, we need to consider the socioeconomic conditions. So that's everything from housing affordability and availability to income inequality. And then on top of that, adaptive infrastructure from a physical perspective, but also social resilience. And then finally, integration services. So the services that would allow a city or community to actually effectively integrate those newcomers and allow them to become part of the community. So that's everything from education and jobs to possibly, language support. And in the case of displacement, even mental health services. Sorry, just a second. Right. So you might think in looking at all of this, that this is a public sector problem, and that's what we've been tending to talk about and go to in this whole conference. We're talking about what the public sector can do. And certainly if you think about adaptation and integration services, that's where you might go first. But actually the private sector is going to be involved in all of this. And what I'm especially interested in here is that we're actually going to see forms of corporate climate migration, which Greg and Calandra have already been pointing to. And so what is that going to mean for these receiving communities? So I think this is something to study that's going to be increasingly important in this field, but it's really in its infancy. We're just starting to see, initial anecdotes that maybe there is some corporate climate migration. If you saw Linda Shai's presentation the other day, she mentioned Micron, a semiconductor factory moving to Clay, New York. One of the reasons was because of water and wastewater infrastructure. So, maybe that's corporate climate migration. An economic development organization in Illinois is centered around the blue economy. And so they've come out with an economic development strategy that specifically references their expectation that they will see both households and businesses moving to Illinois for the water. We see in Wisconsin, there's a lot of economic development around water technology. In Michigan, there are EV battery plants, setting up operations. Of course, in all of these cases, climate is only one factor. There are a lot of reasons that EV battery plants are opening up in Michigan. It's the center of the auto industry, but maybe water is a factor there too. So as this starts to happen, we need to really proactively think about what this is going to mean for conditions in those receiving communities, how it will constrain and shape opportunities for the people that already live there and for the individuals and households that are moving in and trying to seek a more climate safe location.
All right. Good afternoon. My name is Jessica Mederson. I'm an attorney, a construction and business lawyer in Madison, Wisconsin. I was actually born right there at the tip of Lake Superior in Duluth, which I know everyone here is sick of hearing about. But I also then spent time out east and down in Texas. And I know that for most people on the coast, when I say I'm from Wisconsin, they really don't know where it is. So I always like to start just like, there, people, that's where Wisconsin is. All right. See, yeah, lots of confusion. And it's really partially coincidence, but partially not, that I guess I'm here, right? Because we heard a lot from our co-panelists from Louisiana about places that may be losing communities, while Wisconsin, on the other hand, may soon have a lot of receiving communities. My town of Madison, obviously, and Milwaukee have both been called climate havens. Obviously, Superior, which is the Wisconsin side of Duluth, and Lake Superior, that should be getting the same press as Duluth for being climate proof. But yeah, so Wisconsin obviously is a state that needs to be preparing for this, but I can tell you it's an interesting state. And so I moved up there from Texas 10 years ago. I thought I was moving to Minnesota Junior. I didn't know that I was moving to Texas Junior when I came up. And it's a very divided state politically, which makes some of these issues really hard, right? I mean, I am working, for example, on a statewide climate migration group. Some of the people, extension officers and everything in rural Wisconsin, who talk to farmers, and farmers know what the weather is, and they know the weather is changing. They will say that. They will not say the word climate change, right? So you've got this real tension there between, the kind of red parts and the blue parts of Wisconsin, which means that you have the same challenges there that are getting a lot of attention in Texas right now too, where local efforts to do things are often blocked by the state legislature. We're not as totally red as Texas, but we do have a divided state government, which makes things difficult. So, for example, if Madison is trying to put in certain ordinances or do certain things to address climate change, that's often blocked at the state level. The state level, they impose all the building codes. And even just one small example that's being litigated right now, Madison tried to make a rule for skyscrapers to have bird-safe glass because we lose a lot of birds. That's actually being contested as the city of Madison overstepping its bounds. So if we can't even get to some bird-safe glass on skyscrapers, it's going to be really hard to address in other ways climate change, incorporate resiliency, things like that. You also then have the issue with government specifications. What actually started me on this whole path was an infrastructure project that failed. And of course, it's construction litigation. So everybody got involved. Everyone pointed fingers at each other. But a lot of the experts were saying it started with the DOT specs. The DOT specs were outdated. They weren't addressing the fact that groundwater levels, which just in Wisconsin and 2020 and 2021 were at the highest levels ever. Infrastructure, which is very important for both existing communities and as we bring more people in, a lot of those specs are outdated and are again looking to the past instead of saying, what is the future going to be? There's also the issues then Wisconsin has, it's been there, I think, since 1848. I'm the only person in Wisconsin who doesn't know my Wisconsin history. But, there's lots of easements and covenants. You've got farmers with a lot of rights. Even I've got a client right now where you've got this sewer district wants to do a green project, but the county actually has an easement over that land that's preventing them from doing a green project there. So again, you can have that sort of disconnect between different local governments because they don't want to give up their covenants or their easements. Wisconsin for eminent domain, of course, they do have a right to basically take, I'm assuming most people are familiar with that, take property to use it for a public project, but in Wisconsin, you are specifically banned from doing that to give it to private property. So if we need to say we need to take some property to build affordable housing for people or something, that is explicitly banned under the Wisconsin Constitution. Then you can have things, this is actually based more on my time in Austin, where, obviously a lot of environmentalists in Wisconsin and a lot of the hunters and fishers too feel very passionate about the wildlife of Wisconsin, but that can sometimes cause conflicts with development that's needed to bring new people in. We saw this when I lived in Austin several times with salamanders and an endangered salamander species. Really, right now there's, I think, a lawsuit going on that is limiting their ability to develop highways. So you've got those sort of tensions. And again, you've got the Mederson and Milwaukee that at least want to do something. There's a question on what they're limited on. And then you have other parts of the state that still refuse to kind of even acknowledge that this is an issue. Wisconsin also, I kind of want to highlight here, I thought when I came to Wisconsin, we've got tons of water and, so we'll never run out. It's never a problem. I mean, you can see here, Wisconsin does have a lot of water. We actually have more miles of trout river fishing than Montana does. I hear that all the time. And you'll also see, of course, we're very lucky to have the Great Lakes. But if you look down kind of right there on the Wisconsin-Illinois border, which is really one of the most densely populated parts of Wisconsin, you'll see that the water level basin, that light green there, the Great Lakes water basin is actually very narrow. And I'm going to talk about that on the next slide. We're not like Michigan, where the entire thing is included in the Great Lakes water basin. So even in Wisconsin, where it does look like we have a lot of water, we still have a lot of issues, which is going to impact our ability to take care of both existing residents and future residents. There's a lot of litigation right now, and I know we're not the only state dealing with this, but about PFAS, right? And a lot of our rivers, even our kind of famous like wild rivers, which Wisconsin people are very proud of, actually have major PFAS issues in there because of the water mills, because of the different paper production that was going on, also fire suppressant activities. So that's a major thing. CAFOs, for those of you who aren't familiar with those, they're reason enough to become a complete vegan, and I hate myself for not being a vegan yet. They're basically confined animal feed operations where they jam in thousands of animal units and they consume massive amounts of water to keep the animals alive, and then they create massive amounts, obviously, of manure and effluent. And so we have this is happening both in Wisconsin and Minnesota, where there's real concerns here about both they're taking water away from the existing residents in these rural areas because they consume so much water. And by spreading the manure over all these fields, which is how they want to get rid of the output of the animals, there's real worries there about contaminating the water sources. So we've got those issues already. We also have the question about, like, basically, even with all that water, how much of that water can we access? The Great Lakes, even though we've got Lake Michigan there and a little bit of Superior, there's a Great Lakes Compact that talks about basically who can access that water. And you technically need to be in the basin to be able to access the Great Lakes water. So as I showed you, the most dense part of Wisconsin actually does not have access to all that water. And in fact, back in like I think it was 2011 to 2013, there was a town called Waukesha, which is really a Milwaukee suburb. Their groundwater was actually contaminated, so they couldn't use groundwater. So they tried to get a diversion from the Lake Michigan, and it was a major political battle. It's one of the very few diversions that's been allowed. So even accessing that Great Lakes water is really tough. We also have the issue, and this is very timely today, we have a lot of Native American tribes, both in Minnesota and in Wisconsin. There was a Supreme Court case from 100 years ago, the Winters case, that talks about part of the U.S. when we had these treaties and established these reservations for the Native Americans. We also guaranteed basically that they'd have enough water to use, to hunt, and to fish, and to farm. I don't know, those of you who are paying attention to the Supreme Court, there was actually a case on this that was just released today about the Navajo tribe, which relates to the Colorado River fights, of course. And basically the Supreme Court just ruled against the Navajo tribe there. I haven't had a chance to really dive into it. Basically, they said, well, sure, tribes, you still have rights to water, but the federal government doesn't need to do anything to make sure you can actually get that water. So I don't know what that's going to do to the future of that. But right now, we do have a lot of tribes who do have rights to that water too. So we cannot, it's hard enough, of course, for the existing immigrants who are in Wisconsin to come in, a lot of the farmers or other people to say, we get all this water, and then we're going to be getting more people. Also, again, you know, we're an agrarian state, and so you have a lot of weird, quirky laws. There's specific cranberry laws because cranberries are very big in Wisconsin because you need to be able to flood out the fields. And there are very specific laws about not being able to basically prevent cranberry fields down the way. You can't restrict their right to the water they need. There's even normally, you know, governments, municipalities are immune from a lot of lawsuits, but there's actually a special liability if you build a road or a railroad or something and cause flooding on private property. So governments can actually be liable for that. So it's a tricky maneuver when you want to do anything. So with all that said, you know, I do like to say that I tend to do more in the private sector than in the government sector, but I talk about for both of those, the first step, and that's what we're working on. That's what I'm trying to talk to everybody in Wisconsin about, is even be aware of these risks, right? If we're going to start doing urban planning, if we're going to start building more housing developments, all of that, even in Wisconsin, we're not immune from climate change, obviously. There's still going to be a lot of problems there. One of the things they talk about throughout the Midwest will be heavier rains and more flooding. And in fact, I just talking to a contractor who's in trouble. He's been a contractor in Wisconsin for 30 years. And he said, water has basically been the cause of every construction problem he's had, right? And we're about to get more water. So the first step that I try to talk to contractors about, that we're talking to municipalities about, is identify the risks, like understand, you know, DOT, stop looking backwards, you know, building codes, stop using these building codes from decades ago. We have to start looking forward and preparing for the future. And you can't say, well, this is how it was always done. This is how my grandpa farmed. This is how my, you know, parents, how they handled the concrete business or whatever. You need to identify those risks. That's the first step. Then you need to assign responsibility, right? To me, as a litigator, it doesn't matter. You can go around pointing out risk, but if you don't say somebody's responsible for actually addressing those risks, it really doesn't matter. It's kind of like when you tell the kids to do chores and you don't specifically assign a kid to a chore, nothing gets done because they all say somebody else should have done it. So, you know, you can do this. Obviously, governments can do this through DOT specs, or I keep coming back to the DOT, sorry, but government specifications can actually assign responsibility or require certain things to be addressed. In my world, you can fix most things with a contract. If you're dealing with private businesses, put it into a contract. That's what I talk a lot to developers, to architects, to contractors about. Say in the contract, you know, we need to analyze these risks. The engineer is going to be responsible for, you know, analyzing the impacts of heavier flooding. The contractor is going to be responsible for actually checking the site conditions and seeing what the groundwater levels have been, that sort of thing. And then you transfer the risk. You can either transfer that in the contract, making certain people responsible. And if they fall through on that, they actually have to indemnify you, which basically means cover your losses. Or of course, one of my favorite things to do is always say, you know, that's what insurance is for, right? To the extent we still have insurance, which I know obviously that was a part of the first panel. There's lots of places where we're not getting that insurance now, but if you have the insurance and can transfer that risk there, that is still a great backstop.
Thank you. After seeing that watershed basin, I'm relieved again to live in Montreal at the headwaters of the Saint Laurent. Well, great. Once again, I'm Greg Lindsay, Senior Advisor to Climate Alpha, part of the founding team. For the sake of posterity, I would just give another disclaimer here that I'm speaking today in an individual capacity. And I'm not actually currently paid by the firm to do so because I want to be able to actually critique and interrogate some of the implicit assumptions in what Hannah phrased as corporate climate migration. Basically, what Climate Alpha is we are the people building the tools to assist in corporate climate migration. Now I have like a new tagline I'll use for it. Our previous tagline is, other companies tell you where to sell, we tell you where to buy. That is exactly what we do. And it factors into it because it's what sets Climate Alpha apart from Generation 1.0 of, again, repeat part of my jokes again for posterity and the new audience, of what Tulane's Jesse Keenan once called like the climate risk analysis arms race. Previous firms like 427 and RMS that were bought by Moody's, Jupiter, which he advises today. We're part of the second wave where, we're basically, instead of focusing on how slowly or how quickly your portfolio will lose money, we're focused on where are the resilient geographies of tomorrow, where there's actual opportunities for investors. So as you can see here on this slide, we basically use a combination of blue chip climate models and the best climate science around. And then we combine that with various socioeconomic data sets, which I'll discuss in a moment here, to basically meld this platform together using machine learning and other techniques to produce predictable scenarios. B2B clients here, as I mentioned in the first session here, that really comes from this vision, this much grander vision beyond just simply the notion of like identifying neighborhoods, to future-proof human civilization through greater investment into climate resilient geographies. Like that is the grand vision. Someday, perhaps we'll get there, but that's that notion of, where are the opportunities in, in that $300 trillion global property market? How do you shift as much as that is possible into more climate resilient geographies versus being stuck as stranded assets, as Nouriel Roubini and others have talked about, with, trillions of dollars of losses and potential panic selling and massive disruption to both real estate and global financial markets. So in the first session, I talked about what Climate Alpha is. Now I'm going to mostly talk about how it works and what you could use it for, or what we could use it for. Number of ideas here. First is this proprietary data sets and wide data approach. Like I said, we use vetted climate models. Our gray box is not gray because of the climate science. Our box is gray because we basically pull in all of these other proprietary data sets or scrape them from various places. I think one of the ones that comes to mind is like we look at vacation rentals available in a certain area, or Airbnb listings as a bellwether of potential Zoom towns potential. And then to put that all together into our various box. And we're adding to it all the time. Most of the money that we've spent so far as a startup is actually spent on acquiring data sets, licensing that kind of data to basically feed into it. And it's being updated all the time too. I'll show you that in a second. Then again, using machine learning methods developed by our chief technical officer out of Singapore and a team of data scientists and computer scientists really from across the global South. A lot of our engineering team is in South and Southeast Asia. And then I think where it gets really interesting, I'll talk about this, is the sort of scenario modeling approach. So Climate Alpha is not a deterministic tool. It's choose your own adventure. Set up your climate, your climate scenarios, be as optimistic or as pessimistic as you like, and use it to stress test portfolios under certain circumstances. My favorite example of that quickly is that we've toyed with the idea of creating the ultimate worst case scenario. We call it internally RCP 11. I'd like to think it's sort of like a Spinal Tap joke, turn it up to 11 if you really want to get through the worst case. And then I think the most interesting and perhaps controversial part, or ties into Hannah's there, is signal detection for first mover advantage in resilient geographies. The science is above my head, but part of what our scientific and technical team is doing is basically trying to find cutting edge science to understand when populations are just beginning to move out of a place and begin to move into one, to actually begin to model the moments in which those flows become perhaps inevitable, or at least detectable there, and on behalf of the corporate customers or government customers, understand when a place is about to tip for good or for bad. So quickly, here's some of the data sets we use. I mentioned Airbnb rentals here. I think, obviously this is why I'm wearing my critical hat, is that we could interrogate some of these. And I have raised, internally, at least some of my qualms about them, about, such factors as crime. How is that measured? How is that factored in? Credit scoring, obviously, like we can find problematic variables in many of these here in terms of thinking about what that means. The fact that population density is often rated in our structure as a potential negative, that there's too many people around if your region becomes climate stressed. So, I think it raises some interesting questions, which gets into, again, sort of why we use a scenario modeling tool. So Climate Alpha is effectively 4 different things. Climate price is the core of it. It's risk-adjusted return forecast. This is where you basically model out to 2040 how we expect the price of a particular property or geography will, or average property in a certain geography in most cases will change on an annual basis. You can model it out under multiple scenarios, which I'll get to at the end. The resilience index is basically how we sort of create our scores for every county in the United States, those 40,000 zip codes there, and basically create this dashboard, which again, we make available for free to local public officials. They can get our dashboard for free so they can see how we're scoring their variables, which change in real-ish time as we constantly update them in the models. And then Alpha Finder, I think, is one of the interesting ones. Alpha Finder is a tool, particularly for investors so this is a section of your portfolio that you like, or, you want to find other properties that look just like this subset. You can go and model it across the United States and Canada and elsewhere. The closest version of this is actually what Facebook did, is made it such a powerful marketing tool. You have this audience, you want to find more people like it, they would clone that based off likes. We're basically using likes that are climate and socioeconomic variables that allow you to find these other properties. And then the final piece of that is the scenario forecaster. So that is our tool that allows you to basically choose your RCP or other set of variables, and then basically sort of run out all the potential scenarios from Goldilocks to RCP 11, if we ever get around to building that. And that, I think, is really interesting in the sense of it also sort of goes to show that, that Climate Alpha, despite its name, is not purely a climate tool. There have been, I will say, some internal light discussions about, do we someday change the name, given, as I think other people have pointed out, that like the word climate itself is beyond politicized, or also, the fact that you can use it and you can simply sideline climate completely. You can simply use it as a site selection tool. But we're obviously very adamant about this. And this is the kind of thing that gets back to exactly to what Hannah was talking about, is that, we think you should be using this tool to understand that there are underappreciated geographies in the United States under the worst case scenarios, or at least the current worst case scenario, RCP 8.5. And that, yes, and that if you are a large institutional investor, there are other areas you should go. This, of course, opens up a whole host of political questions, social and cultural questions, which we should and hopefully will discuss today. It gets back to all those questions about integration that Hannah raised, and climate gentrification, and many of the debates we've had. But, this is, I think, one of those questions that comes up is, is it better if Blackstone builds a single family rental community in Vermont versus in Phoenix? Maybe. Again, this goes back to these kinds of questions we want to judge. And, we have other suggestions of this. As I mentioned in the first session, one of the things as a startup Climate Alpha is finding is it has many great ideas about how we think you should use our amazing tools. These often are not the ideas that investors want to do. So in this case, we sort of look at, when we obviously suggest arbitrage opportunities, where is there underpriced future value because Americans want to move to coastal Florida in high risk areas and not lower risk, more resilient areas. How can you use Alpha Finder to find more examples of assets you've already identified as good? Where are the other Duluths in the world, if we want to use that cliche? I think one is interesting. This is not actually real, but climate oasis certification. This is an idea that Parag and I and others have had, which is the idea that, that perhaps you have some future verification process that, you might literally have climate haven trademark, as we do there, to imagine that this is actually sort of vetted according to certain criteria, and that you'll see, branded real estate products roll this out. I once proposed this half seriously to Nationwide under a foresight scenario, and they took it seriously. It was that classic, don't create the torment nexus, says the novelist, and they create the torment nexus. But there you are. Portfolio analysis. Again, using this to forecast the future fair market value of your holdings and basically revise it, assign various scenarios there. And then, and then one of the ideas we have is to basically, imagine green bond issuance. We at Climate Alpha have used our tool to basically say that this is a climate resilient zone, and therefore you should have, basically lower borrowing rates to actually invest in it. And this would lead you to sort of things like this, imagining, self-sufficient resource zones, the idea of, here's actually, again, close to bonded climate havens, imagining different types of portfolio construction here, or basically start to flag some of the areas that, due to a combination of climate and socioeconomic factors, are perhaps the most likely to be at serious financial risk. I talked about in the last session about, one of our hopes is that governments will use this as a way to channel the investment opportunities, public investment opportunities that come out of the IRA and bipartisan infrastructure law. And then, one of the ideas ultimately is, to look at other geographies. Climate Alpha's ambitions are not confined to the United States and Canada, but soon the UK and ultimately larger geographies. And so for one example, this is a piece that I actually worked on here is, in terms of like, how would you use it? We basically took a combination of climate variables and looking at a set of variables that we selected that, that we think factor into when people are choosing one of those inland gateways that Hannah said, so-called Zoom towns. We try to ask, like, well, what Zoom towns of the pandemic, because many of them are already fading as people move back into metro areas, will be tomorrow's boom towns, which are likely to last. And so these are some of the factors that we took. To me, the most hilarious part of this is we came up with a list of 20, and the number one county for Zoomtown of tomorrow was Los Angeles County, which has about 3% of US population, among other things. So it goes to show that, the population density and size is its own kind of variable. And I think cities will continue to be attractive. But, we flagged some of these other ones too. Portland, Oregon, despite the fires, we think will continue to be attractive, the most attractive among America's small and mid-sized metros. Delaware County, Ohio, that's a fast-growing suburb of Columbus, one of the few, metro regions in the Midwest that continues to grow. Simpson County, Kentucky, just across the state line in a somewhat rural county outside Nashville, another thriving boomtown. El Paso County, Colorado, part of Colorado Springs in that one. I'm curious about the water issues there. And then I think, my favorite was Muskegon County, Michigan, which is a bit of a small sort of, on the west coast of Michigan there, an exemplar of many of the communities that we talk about. So finally, just in passing, this is some of the other things we include in our decks here about thinking about the fact that, if you were here in the previous session, Calandra underscored not just a lack of affordable housing in the States, but also, we're going to have a massive wave of retirements by the boomers, the silver tsunami. We have so much senior housing we need to construct, an opportunity really to build sustainable communities of tomorrow for them. So using this as a tool to identify where we can relocate older populations safely in these kinds of retirement communities, identifying, which of those we talk about, as Hannah mentioned, legacy cities. Well, which properties in legacy cities are, and which legacy cities are actually worth the kinds of investments to convert older properties and buildings, office into housing. One of those ideas that we keep talking about, but, refuses to pencil out. And then coming back to thinking about, should we actually be changing, how we apply borrowing, those sort of mortgage rates in resilient geographies, or, basically getting back to that question of, rather than banning entire states, can these tools be used by insurers to identify pockets of opportunity? So that's some of what we propose, and I'll leave it there for Calandra to take from there. Thanks.
Hello again, for those of you who were here earlier. So I'm going to zoom out for just a second to a more global view, just to point out that 1.2 billion people live in nations that aren't resilient enough to withstand climate change, and that the displacement risk from sea level rise alone has increased just over the last 30 years. The projection has increased from 160 million people projected to be displaced to 260 million people. A growing percentage of the world's climates are moving outside of the climate niche that is most livable for humans, already causing global shifts in climate migration. Much of the lower half of the US will become too hot or dry for the type of climate that humans typically have traditionally lived in. And it is expected that there will be huge upheavals, right, in where we grow food, live, work, play, all of those things. And we will have fewer and fewer resources to go around as these shifts occur. And I point out specifically the US in this because we tend to think of this as sort of outside of the US a lot of the time. So I'm Calandra Cruickshank. I am founder and CEO of StateBook International, which is a location intelligence company. And we have put together a new way to analyze markets and provide actionable intelligence to drive strategy, mitigate risk, and build resilience. To do that, we aggregate over 32 billion data points from across all different federal and other sources. These data sets tend to be very siloed. For those of you who are in the last presentation, they don't work and play well together. They don't work and play well at all in some cases. It's very difficult to extract insights out of a lot of this data. But what we've done is we've normalized it across the entire US and down to the census tract and block group level and visualized it so that people can really get the insights that they need to drive strategy on things like climate migration and corporate location and economic development and quality of life and equity and all of the things that we're facing today. We've also, in the last couple of years, added climate risk and resilience data. So Climate Alpha, which you just heard about, is one of our data partners. We've brought their resilience climate risk indexes into our system, which help, as Greg just described, measure the risk, vulnerability, and readiness factors of communities to be able to withstand those risks. And we've brought in the FEMA National Risk Index, the Climate and Social Justice Screening Tool, and a whole variety of different data sets that enable you to get down to a block group level to be able to identify what is happening, what are the risks, how do we mitigate them, and so forth. And we visualize all of this data in very interactive, granular ways that help both tell the story of what is happening on the ground and then project some of the risk and strategies that can be developed. One of the data sets that we have access to actually measures hazards like wind, tornado, wildfire, earthquake, and particularly flooding down at the parcel level, and then projects over time what the risk is likely to look at. Like, so if you're purchasing a property or you're looking to invest or rehabilitate a property, you can actually see, according to like traditional mortgage schedules, what is my flood risk today versus 15 years from now versus 30 years from now? And what are the different scenarios that might impact that if there are different category hurricanes or sea level rise comes up or down by so much, right? So this is all incredibly valuable. And especially then when you combine that with the socioeconomic data that StateBook traditionally collects, you can identify who are the people that live in these areas. Is it a disadvantaged community? What are the businesses that are impacted? And so you can look at data like this to identify what is the age, education, income, race, education level, occupation, all of these different factors about the people who live there. And then what are the businesses, and not just what are the industries in the area, but how many people do they employ? If there is a hazard, right? If there's a flood or a wildfire and so forth, and those people can't go to work, what is the impact on the tax structure? Because those people are no longer employed, or, you don't have the tax revenue coming in from the business and so forth. So in the last session, there was a question on how does ESG impact this, and how do we actually benchmark and measure the impact going forward? So we've started to bring together a bunch of different data sets that address this. The Climate and Economic Justice Screening Tool is one, because you can look at that data and understand what the different equity issues are in an area, and not just equity as you would traditionally think about it, like race or income, poverty, et cetera, but also things like pollution. And, there's a very wide set of parameters, like how is education and impacted and so forth. We also brought in the impact potential data from climate, what's it called? Global impact. You would think I would remember that. Global impact, which is a score that gives a score to every single census tract across the country based on what is the impact that an investment can have on this community, and what is the actual granular subscore of how can I impact healthcare, access to education, poverty, unemployment, diversity, all different kinds of parameters, and then benchmark that over time to really get down to a granular level to understand what is happening in the region. One of the things that we have noticed, and is very disturbing to me personally, is that I mentioned in the last panel that there is an enormous amount of money coming down from the federal government to address a lot of these issues, more money than we've seen since the New Deal, literally. So it's just an extraordinary amount of money. And the government is, for the first time, mandating that things like resilience and equity be part of the equation in order to get the money. So they're really kind of reassessing where this money needs to go and addressing some of the most in need communities. And that's incredibly admirable, except that in a lot of cases, they don't know what to do with that. They don't understand and haven't been educated on how to elevate their community. Do they need to move? Can resilience measures be taken into account and put into place? And how do we get there, even if you identify it, right? So there is a huge amount of education that needs to happen at the local level. And there have been a lot of discussions throughout the last couple of days about how these decisions need to be locally led, which I think is very important. And I mentioned in the last panel, a lot of people, well, the communities themselves, they really understand their culture, what they value, et cetera. They have emotional attachment. That doesn't necessarily mean they know what to do and what steps to take. So in order to address that, we have started building out a whole toolkit and framework system to help identify the steps that communities can take. This economic resilience scorecard is the first step toward that. We partnered with the International Sustainable Resilience Center, and we developed a 50-question scorecard that helps a community benchmark and assess where they stand today in economic resilience across a different host of things you see on the screen here: natural disaster, pandemic resilience, cyber, et cetera. And then it gives them a step-by-step framework of here are the pieces of the puzzle that they need to put into place in order to improve resilience across the region. So any of the areas where their self-assessment says we don't meet the standard that we want to meet in our community, now they have the puzzle pieces to put together. Here's the communication frameworks. Here's how you create public-private partnerships to address this. Here are the different stakeholders you have to have at the table, the cost you can anticipate for having some of these, implementing some of these tools, and then funding sources of where you can actually get the funding to do these and implement and, measure the change. So another thing that we regularly come across, and we work with a lot of utilities across the United States, but, electrification is being held up as the solution for our heat, for running, manufacturing, for vehicles, right? Transportation, we're all moving toward EVs. The problem is we don't actually produce enough electricity in this country in a lot of places, right? So the red states here don't produce enough electricity today to manage manufacturing, heating and cooling houses, all of the things that we use electricity for. They have to buy electricity from their neighboring states. And the blue ones are sort of neutral. The green ones produce a surplus. But this is a problem across the country because even the ones that produce a surplus, we're now getting away from fossil fuels and the things that are contributing to climate change, right? So as one piece of this puzzle, it's really important that we understand what goes into the impacts, the contributors to climate change, and how we mitigate that. There is literally not enough land in a lot of states today to build wind farms and solar farms. So the states that have space to build it, Indiana, Kentucky, et cetera, they're winning all of the new projects, new, manufacturing projects and building projects and stuff, because a lot of the other states literally don't have land to do it. So there needs to be a huge amount of innovation in this space in order to help us get through some of these other steps that we need to address. I'm going to skip a couple of these just because there's a lot in here, but it is another thing that's really, I think, important to address, which is that real estate contributes to nearly 40%, 38, 39, 40, somewhere right in there, of carbon emissions. So that's when you add up the carbon emissions from building a building, from heating and cooling buildings, from running a building, right? So it all adds up, and real estate is an enormous contributor, which is why companies like StateBook and Climate Alpha really pay attention to that real estate space. And I think what's really important as humans start to assess where we're going to migrate to as a result of climate change, right? You have to think about adaptive reuse. So how do we make these buildings more resilient? Do we need to move out of an area, or can we find ways that we can actually reuse these buildings and make them more resilient? So I saw a presentation by FM Global recently, which is one of the largest insurance companies in the country and world, probably. And They gave a whole presentation on what they are doing to help their corporate clients. I wish they were helping communities and people, but they're not yet. But they gave an example of a manufacturing company that has to be located on a river because of their processes. That river is flooding. It was 1,000-year flood, and then it was 100-year flood. Now it's like, every few years it's flooding. And because that business has to be located on the river, they can't just pick up and move somewhere else. So what FM Global did is they came in and they did a whole analysis, because this is the rule of thumb, $1 in resilience today, right, equates to on average $6 that you don't have to pay out in the face of a disaster. So that's an important stat to remember. But so what they did is they came in and they actually did an analysis and elevated all of the equipment that would be damaged by a flood. And so today, that building, the water comes in when it floods. They rebuilt the roads going in and bridges going in so that employees can still get to work in the face of a flood, and none of the equipment gets damaged. So that's an incredible example of adaptive reuse. And the insurance company helped the company fund all of that work because they knew they wouldn't then have to pay out a huge amount of money in the event of a flood, right? So these are some of the things that we have to think about on the residential side. Well, total, but 80% of the buildings that we have, that we will have in 2050 already exist today. So how do we reuse those? If there's a hurricane, can we just put a new roof on so the roof doesn't fly off in the face of a hurricane, right? What are these adaptations that we can commit to that will help in the future? And the average lifespan of a building is 45 years, which to me is shockingly small, right? But that's the average life. And then other things that we can think about as we go through these analyses, like 50% of demolished building materials today just go to a landfill, and that's part of the contribution toward carbon, right? But 25% of that can be reused, 70% can be recycled. And so now there are new technologies coming out where when you go to a construction site, you can literally, they have like an app. I just saw this at the World Real Estate Forum at MIT, which last week, which always has like the most future thinking solutions. But there's an app, you can take a picture of the building being demolished and be like, there's this much pipe that could be reused, or this much, all the different concrete that could be ground down. One of the other cool pieces of data that we're bringing in specifically for real estate, but actually has a big implication on climate is the real estate transaction data. So property assessments, how are those changing over time as it relates to climate change? And are they, right? Or should they be? And then who owns the buildings? What was the last sale value? What is the implication? Like Climate Alpha has that score, that price calculation of what this property, how you should value this property based on the climate change impacts of the region. And then we also are bringing in all of the data for what's the land use in an area, right? If you're doing a climate assessment and most of the homes are mobile homes, they are way more at risk than, stick-built solid construction or cement, especially, right? Or reinforced steel, et cetera. So you can really start to identify where the risks are based on the land use, the income, the poverty, all different kinds of things. So one of the other cool data sets that we have brought in already is mobility data. So we can help you identify before, during, and after a disaster, where are people moving around? How are they moving based on their cell phone signal? How are they moving around? And then we can say, okay, the people that moved from here to there, origin and destination, they had these socioeconomic characteristics, right? So we can identify race, income, poverty, occupations, where are they moving to and from as it relates to different types of disasters. I'll show you, if this will work, I'll show you 2 seconds of this just to show you how cool this mobility data is. This is literally people, each column is density of population. So it's literally how people are moving around hour over hour, day over day in the city of Fort Lauderdale in this case. But it's amazing how you can actually track this stuff. So we'll got to get out of this so I can move the slide forward. And another piece is commercial potential. So as we evaluate these different locations, how do we identify highest and best use based on socioeconomic, demographics, how people are moving around an area, what other retail or residential things are in place, and so forth. Impact potential score we talked about. So really quickly, rethinking urban design and resilient buildings is obviously really important. This is a project you guys can look up if you want to. It's called Urban Community in San Jose. And designing buildings to bring the inside out, to make better quality of life, places where people want to be and buildings want to be. And then the city of Boston, last point, is really a case study. They're putting together a case study of public-private partnerships and how you really bring all of these contingencies together, keeping equity and resilience top of mind. And they're partnering with companies, private data companies, Fannie Mae, et cetera, to create new metrics that include climate risk, and all of their property valuations and projects going forward have to meet these different criteria. And one of the interesting things is that 74% of their city budget comes from property taxes. So what's the implication on climate change? And that's why they have to pay attention to this, right? So thank you very much.
All right, so at this point, panelists can move on to this table. I'll sit on this chair over here, and then we'll have a moderator Q&A. Thank you for the very informative presentations. I think in New York City, that number, that 39% of the greenhouses emissions come from buildings. Here in New York City is about 70%. Does this work? Can you guys hear me okay? So the first question goes to Calandra, our insurance expert on this panel. And can you alluded to this, but can you, Carolyn, sorry, Carolyn. Carolyn, what types of broader partnerships could help link insurance with managed retreat?
Sure, thanks. I think that's a good question, because I think in order to solve some of the more pressing, particularly social aspects of this problem, we have to be thinking about some unconventional partnerships, and certainly partnerships that cross sectors. So I'll give you two examples that I think kind of help make that plain. So the first, it's okay. So I think the first good example is thinking about how to harness insurance dollars at the time of rebuilding to invest in resilient structures, but also in decarbonization strategies, right? It's a time that we could build more energy efficiency. We could start incorporating rooftop solar, all sorts of things. And insurance is a tool that can give you the extra funds that you need to do that at the time of rebuilding. But what insurance can't do, and why we need the partnerships, is that in that aftermath of the disaster, nobody has the bandwidth to figure that out. They don't know what they're supposed to do. They don't know how to prioritize actions. They don't know which ones are, good for their home versus another one. They don't know how to find a contractor who's trained to do the work and is going to charge them a fair price. So you have to have a partnership with some sort of NGO or local government that can really do the high touch work of connecting with the household to take them through that process. Because it's not just the money, it's knowing what to do with the money and do it well. I think the second example that I'd give is a pilot that we've been involved in here in New York City that's been designed to help make dollars quickly available to lower income households after a severe flood event. We kind of found in some of our research that a big challenge with some of the real severe inequities that you see in recovery is that it sometimes takes a very long time to get dollars into the hands of people who need them. And more affluent families can do fine with that delay. They have liquid savings that they can use to tide them over. They can run up their credit card and know they can pay it off later. But lower income families really struggle in that moment. And we saw them engaging in coping strategies that can have real short and long-term negative impacts for the household, like falling behind on bills and their mortgages, or having to pull back medical expenses in order to pay these real near-term disaster costs. And so in order to design a solution to that problem, how do we get flexible dollars into these people's hands quickly? We had to partner with not just the private insurance sector and insurance brokers, which we did, but with the Mayor's Office of Climate and Environmental Justice and a local housing NGO, the Center for New York City Neighborhoods, because while we need to transfer catastrophe risks globally in order to better manage them, those firms are often not connected enough on the ground to understand the real need. And so the solutions might not actually meet the needs of those people. So you have to have these partnerships with community groups who can understand what exactly niche needs to be filled and how to design a solution that actually works for this specific target population, and also for a population that has a lot greater trust in that community organization. So I think those are the types of partnerships that can help us with the
That's great.
solutions.
Thank you. The next question is for Hannah. You alluded to corporate climate migration. Can you tell us more about it? What are you seeing in terms of corporate climate migration, and what are the risks associated with that?
Well, the risks are legion. I think we just started to see what some of them might be. So I already mentioned a few of the potential corporate climate migration examples that we're seeing. There are a few others, like in Florida, that Spirit Airlines built a second headquarters in Orlando because their first one was in South Florida. So that actually gets to the point that, some of the corporate climate migration, just like household migration, will be much closer to home. It won't necessarily be these long distance moves. But, I mentioned the Illinois and Wisconsin economic development around water. I mean, right now it seems like the abundant fresh water is a really huge driver, though very interesting to see Jessica's map of the Great Lakes Basin and just how confined those water rights really are. So, I mean, that's even, a bit of a wake-up call on the climate haven front. Sorry, what was the second part of your question?
What were the risks
Oh,
of
the
those
risks.
corporate
Yes,
climate migration?
Yes, the risks. So right, there are a lot of risks. In some of these cases, we're seeing, these large plants moving in that require what are called mega sites, and they will use huge amounts of water, huge amounts of electricity. So we're at a point where, the housing crisis is top of mind, but we also have an infrastructure crisis in this country where we have increasing numbers of electricity outages, increasing numbers of water system disruptions. And so we really aren't at a point that we have infrastructure that can even serve existing population, let alone new population and new businesses that will be using huge amounts of that infrastructure and resources.
Thank you. The next question is a little bit self-serving because I'm in the construction industry. Along with climate related migration, there'll be some sort of construction, right? Hospitals, universities, housing. Jessica, since you're a legal expert, what are the legal hurdles those receiving communities will have to face as that climate related migration takes place?
So again, this goes back to like what started my work in this space was the fact that, climate change is going to impact all kinds of construction in lots of ways, both during the actual development, extreme heat. I know something Monika and I talked about that she worries about a lot. The fact that, there's going to be workers who are doing this construction work who are exposed to extreme heat that can slow down the development, supply chain issues, which again, we saw with construction and COVID, but you can also have related to hurricanes or natural disasters if you've got a single source for things. So, there's a whole host of issues out here that again, everybody in the construction industry needs to be thinking about. Engineers who, Monika and I have just written an article about this, about, engineers who've just always thought they could build to existing building codes, even while every engineering group out there talks about climate change is real and we as engineers have a responsibility to do that. You're going to find some creative lawyers who are going to start saying that, engineer, the standard of care is an evolving standard. And based on the data we have now, you cannot just be saying, I built the building code that was instituted in 1995 and I'm done with it. So there are all these risks. And I just wanted to comment earlier, we were talking about, there's different incentives for some group to do climate migration or think about this. I like to say that a lot of times the lawyers, as much as you want to bash lawyers, and I will bash lawyers all day long, one good thing is that lawyers can actually be a really good stick in this area. I mean, that's actually how I started in this, is because my construction clients love to tell me all the time how much they hate lawyers. So it's like, all right, you've got a choice. You also put climate change in quotes, but you either deny the realities of climate change and pay a lawyer on the back end, or you address climate change now, right? We talk about even ESG and those kind of things. Greenwashing lawsuits are real. I mean, plaintiffs' lawyers will use those. If you fail to disclose your climate risk and due diligence as part of a merger and acquisition, and that's required, let me tell you, you'll have the biggest white shoe like law firms here in New York all over you for years. So, you know, lawyers have caused a lot of problems, and I admit that, but they can also be a really powerful stick in this area, especially the plaintiff's bar. If they can figure out ways to make money off of failures to do things, they will do it. And we've seen even just with McDonald's and the calorie counters, right? That's a direct result of plaintiff's lawyers. So the plaintiff's bar can actually do a lot of good. So lawyers are a pretty good stick in this area.
Thank you, Jessica. Greg, this question is for you. I don't think we are at a point in which the average investor sees managed retreat as a long-term profitable investment. So how can we shape the message so that the investors, developers, builders see managed retreat as profitable?
This feels like a modest proposal you're asking me here for in that regard. Yeah, well, to go first, I guess, you know, to go back to, yeah, this is like the funhouse mirror version of the question you asked Hannah in a way too. It's how do we further this? I mean, the way to think about it is ultimately this is the question of, you know, that, you know, rather than, I don't know, obviously rather than sort of, you know, basically sweat your assets, so to speak, in, you know, in stressed climate geographies, or having all this capital on the sidelines, you know, again, the flip side of Hannah's point about semiconductor plants and others is in addition to federal funds, you have corporations with large piles of cash they don't know how to deploy. I mean, ultimately, we're about is trying to figure out what is the accurate method of deployment. But you know, it's funny, the opportunity for them is the flip side of the risk that I would underscore. To me, the risk that stands out the most, which is the ability that, you know, resilient geographies are going to be a relatively scarce and valuable asset. And yeah, the case to make for them is the age-old thing of land. We're not making any more of it. In fact, we're making less of it when it comes to resilient geographies. So you make the longer cases, which is like, yeah, basically we are literally providing data that shows you how mispriced this asset is. And we can discuss, you know, it should discuss in this broader context about like the limits of pricing and what pricing can do to drive behavior and build sustainable, resilient homes and geographies for people. But the case to make is buy it while it's cheap. And then the larger cases in this is that, you know, there's an opportunity here, and this goes back to some of the discussions Calandra had and Hannah had, is, you know, companies like Lennar, which is, you know, Climate Alpha's first customer, they have a venture portfolio called LenX. LenX invests in a lot of things that are all adjacent to home building, including things like gray water treatment and, you know, basically rooftop solar and other sort of technologies. And Lennar has a roadmap of not just, you know, investing in them, hoping they get big, but actually incorporating those technologies back into its housing developments. So when it comes to home builders, to give one example is the idea of cash out of your investments now while they still retain value in the Sun Belt or other high-risk geographies, and use those proceeds to basically to build sustainable communities from scratch, or to start deploying those technologies in geographies that are likely to last over the next, you know, half century. This, of course, has the whole thing where like you're asking to basically build ahead of demand. If you build it, will they come? You know, there is a lot of groundwork to be laid here about, you know, and I think this goes to discussions. The sessions are blending together here. This idea of, you know, we're basically arguing that climate is going to play an increasing factor among many in site selection by corporates and home buying by others. And so it's in a way, it's sort of an investment in that conversation increasing in intensity and finding that delta between you can acquire that land cheap and make those selections cheap and capture enough value to justify that investment up front. And a final note on that one, yeah, the thing I fear is the ongoing inequality in the United States. My biggest fear of all this is that basically more and more mispriced, future valuable land and communities, all of that, et cetera, ends up in fewer, more concentrated hands, captured by large amounts of capital that are able to afford and understand the kind of tools that Calandra and I make. Basically, my fear is that Blackstone owns the world someday, effectively, you know, because they are the kind of very large scale institutional investor that is building communities from scratch, or is funding the kinds of companies like Invitation Homes that are increasingly commissioning communities from scratch. I don't know. That was a very long, rambling answer, I think.
No, I think that answered the question. Blackstone or Amazon? I don't know. Amazon is just
the answer to that is both.
Yeah, probably both. This question is for Calandra. And this goes back to the first panel, but I think the answer will allude to how do we move forward successfully. You alluded to the fact that even chief resilience officers are not the most educated when it comes to how to use the funds that should be used towards resilience and adaptation. How do we educate those climate resilience officers and decision makers?
Yeah, it's a very big question. It's something that's near and dear to my heart because we're looking at it every day. And, you know, outside of our business, just as a human, it's really important to all of us that we get this right. Like, this is a moment of time that really is ours to lose. We have the wind is at our back in one way, that we have all of the federal funding coming down to help us support these efforts and motivate locations to accept the money and create the transformation. But if they don't know how to create the transformation, you know, we're going to fall short. And this isn't something that, it's not a moment in time where we have a lot of room to fail fast or pivot, right? We really have to like grasp it while it's here today. I was speaking with the FEMA administrator yesterday after the first panel yesterday, or the first session, and somebody else was there and asked the question, like, you know, how do we educate these communities? And I was sort of the cheerleader saying, yeah, this is something we really have to pay attention to. And one of the suggestions that I thought of was that EDA has this framework, the Economic Development Administration, where they've divided the country into regions, and each region is made up of several states and has an EDA administrator for those states. And then each state has an EDA administrator. And that is the go-to person where all of the economic development organizations go to that person to say, we're applying for this grant. Do we qualify? What do we need to do to get it? How do we position ourselves? What do we need to know? And they're sort of, you know, the expert that understands how to connect the dots, because I can't tell you how many even conferences and different places that I've been with economic developers, specifically where HUD is in the room saying, by the way, there's this huge funding opportunity that expires in 2 weeks, and you guys haven't applied for it, you know, and we're going to lose the money. Or EDA is there saying it, or Department of Agriculture, Energy. So one of the questions is like, how do we collect these resources and put them in a central place, right? Which is actually one of the things that we're working with several government agencies on. And then how do we educate the economic developers, the city and county leaders? How do we put the frameworks into place? And then it's things like case studies, right? So how do we bring together case studies so that they have a point of reference that they can draw upon? This is what somebody did well. Equally instructive is this is where somebody failed, right? So don't do that. So there are all kinds of different pieces, I think, that need to be put into place, but it is one of the biggest challenges we're facing today.
Yeah, thank you. I have 2 rapid fire questions before we move on to Q&A. So start thinking about your questions. The first one is, if climate risk was the major factor, where would you move to? And then tell us where you live now.
I'll go first because I moved to Montreal in 2019, the year before the pandemic. And the factor there was, it was sort of at 3 scales. I moved my family to Quebec in the short term due to quality of life. Just simply, I have 2 young children, getting out of American stifling parenting. So that was the short version. The very long version was ultimately climate risk. It was thinking about a combination of water. It was thinking about Hydro-Quebec, and it's, you know, the largest source of renewable electricity in North America right now. And thinking about a government system that I believe is better suited, not the province of Quebec, but at least the federal government of Canada, with its commitment to increasing immigration, I think is perhaps best suited, although not very far from perfectly, towards thinking about future migrants, of which climate will be many. So,
And where were you living before?
New York. I'm still here as well. So,
okay.
yeah.
Got it. Okay. Who wants to go next?
I'll go next. So I live in the Catskill Mountains. I grew up there. It's always kind of been home, but I was down here and then moved back upstate when COVID hit. So I was one of those defectors. But I always thought that our property would be one of those climate havens because we have all of this, our water in our house is gravity spring fed water. And we have, you know, acres and acres and acres, thousands of acres, literally in the Catskill Park surrounded, it's all, the valleys are populated sparsely, and then the mountaintops are all owned by the city or the state. And so it's, parkland, forever wild. So I really thought that would be like a climate haven. Cut to today, every August, we run out of water 2 weeks in August. There's not enough water. Our springs dry up, the wells dry up. It's not a good situation. A few weeks ago, we had wildfires in Canada and we couldn't breathe in the Catskill Mountains, which normally has some of the best quality air in the world. So I don't know that really there are climate havens. There are some places that are more than others, but I think collectively we need to rethink how we are using those resources and what it means and how we do go forward in the face of these different challenges.
No, go ahead.
Yeah, so right now I live in Boston, though I grew up in Portland, Oregon, and it's been sad to see, the heat and the fires and kind of impacts in the Pacific Northwest. It's really disturbing, but I don't know, I guess I'm going to equivocate a bit too, that I think this is a really difficult question and I kind of don't want to be just, glibly throwing out some place that I would move to. And this is one thing that's really driving the research that I'm doing right now is I want to develop a much broader understanding of what potential receiving communities could be. So I'll have to get back to you on that.
Right. That's fine. That's a fair answer.
And I do have a very quick glib answer. Even though I'm in Madison, Wisconsin, I've always had as my safety net. And now it seems wiser than ever. My family farm in northern Minnesota. My great grandpa decided to leave the great farmland of southern Minnesota to go north, which was not good from a farming perspective. But we are actually just north of the Mississippi River. So I'll just talk about the Mississippi. I've walked across the headwaters of the Mississippi more times than I can count. So yeah, if need be, if I have to leave Madison, I'll head there.
I am also not going to weigh in as some of my other panelists have spent a long time studying this question and I have not, so I am not positioned to tell you where people should be moving. I'll tell you that I have recently felt very happy in Philly where I am. We are getting more extreme rain, yes, but we don't have the hurricanes of the Gulf. We can get extreme heat in the summer, but nothing like the South. And we don't have the wildfires of California, but we do have the smoke now when they're in Canada. So, but I don't think there's anywhere that's immune as
And where are you? Where are you now?
Philadelphia.
Philadelphia. Got it. I'm going to keep the second question for the end. So we have time for your questions. So if you have any questions, come up to the mic and just gotta make sure that you're close to the mic so we can hear your question.
Hi, Alec.
Oh, is that on?
It's not
Tap. He's working on it. So I'm Alex Sherman and one of the co-chairs of the conference and also here at Columbia's Climate School. So I found it really interesting to see the kind of data that state and then you're doing at Climate Alpha. What might the risk be, though, of sort of redlining areas as, places you just shouldn't invest in and then just, seeing the fulfillment of the prophecy that you're making? I'll leave it there.
Who wants to take this?
I'll certainly address it because this is a question that comes up all the time for us. I mean, that's the first thing. How do aren't you arming the economic powers that be? To which we always reply is certainly a risk, and it's certainly why we have a commitment to try and get these tools into the hands of governments as well, so they have our tools as well, the same tools and the same principle. Now, Calandra's point that they don't know what to do with it is like, now I'm starting to sweat a little bit here, because even if we give them the best tools, are they able to use it to the same degree that the quants at various hedge funds are? But yeah, it certainly runs that risk. It raises, and that's why we're going to get into the hands of public officials now, so they can actually see the actual risk, readiness, and vulnerability scores that Calandra showed up there. That's in her tool as well, to see this is how your community is being perceived. And we firmly believe at Climate Alpha that like the future is a policy choice, and that basically, and we're seeing how policy choices and investments change the scores in real time. Like, Phoenix is not doomed, for example. The plan, the seems crazy on its face to build a desalination plant on the Gulf of Mexico or Gulf of Baja, Gulf of California, sorry, and go across the Mexican border illustrates like how dedicated they might be to doing that. So it's changes, but yeah, it certainly underscores the risk that, particularly having seen two presentations in Louisiana, like, our models show that Louisiana is in very, frankly, dire straits, that there is a lack of available resources to upgrade that. And so, yeah, does it risk of becoming a self-fulfilling prophecy that steers capital away from it? Absolutely. And we just hope that, or at least I guess I would hope that yes, given the resources available, the state will change, that policymakers, given these tools, will understand that and change as well. Now, I have lots of doubts about that sort of, positivism, that data can change decision-making, but that's a whole separate conversation.
So, and I will add that the definition of crazy is doing the same thing over and over and over, expecting a different outcome, right? So I think we all acknowledge, and that's why you put this conference on, that there are things that need to change. But I think that especially because the federal government has put a mandate on equity and addressing not just the most at risk communities, but the most in need communities, and need can be measured different ways, right? So pollution quality, or, poverty, or race, there's all different ways to measure that. That is an incredibly hopeful sign. And FEMA will be the first one to tell you that they are not necessarily advocating for communities to move or be redlined or so forth. They're trying to put the resources where they're needed most, and adaptive reuse is a huge piece of it, as is, that example that I gave of FM Global, right? Elevating the manufacturing equipment so the river can come in and flood a facility and not impact the work that's getting done there. So there are lots of different ways to mitigate these issues that don't necessarily require redlining. And I think, to Greg's point, that's why it's important to both get the information and education in the hands of the people that need to make these decisions, and also forming those public-private partnerships so that everybody's kind of equally represented and at the table making these decisions together. And it doesn't have to result in redlining. I think the whole goal is to make sure it doesn't.
Can I follow up real quickly? So do you actually feed in desal plans or other adaptation measures as part of your risk metric in the future? Or not? I'm just curious how you deal with plans to address problems.
The short answer is yes, or it gets factored in. Particularly, I'd say this is where it gets above my level in terms of what data sets they're using. But yes, we have scores that underscore public spending, et cetera. There's like some rough aggregate scores to basically capture that political will and the available resources and tax base and willingness to spend on it. So we don't have a system where like, oh, you put up a seawall, you get 10 points. It's not, quite like that, but it is something we're factoring in here, both the current measures today and then the capacity to do so in the future.
And there are companies that do address those things, like Coastal Risk is one, which I presented to FEMA HUD and Fannie Mae like 7 years ago. So they do take those kinds of things into consideration and allow you to do scenario planning to say, if you build this seawall or use desalination or whatever the mitigation effort is, this is what will happen in the face of this type of disaster in the future.
Come on up.
Sorry.
I think it's working now.
Sorry. Hi, everybody. I was going to ask the same question Alex asked, but one quick suggestion, and maybe an outreach program with communities would be interesting to involve them at decision-making level. My next question is, how do people who are not in the private sector feel about the transparency of the products? I know the private sector is very different from academia, but how can we from academia leverage not only the products, but the learning curve that you gather? And how do you feel about, Carolyn, you've been working in academia. How do you feel about this bridge that is not there yet, but it's so necessary for moving forward? Thank you.
I mean, yeah.
Sure. I see a growing challenge with what you've just called out, which is that we have more data and information than ever, which is amazing with all the things you've heard. But what we're also seeing is so many new tools that the users don't know how to understand them. And so I see lots of, whether it's local governments that might be less well-resourced, or nonprofits or community organizations that need access to good information, they don't know how to judge which models are higher quality than others. But even more than that are the harder questions of what are the assumptions that went into this that are really relevant for my decision problem? And what particular analytics do I even need for my decision problem, right? And I don't always need the most fine resolution or like whatever it is. And the time frame, like there's so many factors that go into that. And I think there's a real need for sort of, but to answer those questions, you have to have the technical expertise and know what's behind all of this. And so there's a need for some sort of like translation and assistance program, I think, to help with exactly that problem. Yeah.
So just, I think that as Greg mentioned, the data is not making decisions for us. So I think the critical role of academia here is interrogating what this data is, where it came from, what the assumptions are behind it, and how we want to apply it.
Yeah, and I would just add that, like from StateBook's perspective, we charge communities 1/10 of what we charge our corporate customers. We donate our data to universities. We want to work with these partnerships because it's how we learn how to improve our products, right? And how we help democratize the data, which as founder of the company is super important to me, right? So I think there are a lot of different levels to your question, but hopefully that helps to answer some of them.
Thank you. So we have, unfortunately, we have ran out of time, but we will stick around. So we encourage everybody to come up and ask for questions. And I have one like super rapid fire. If you have any books or podcasts to recommend to all of us, because we love to learn about this topic, right?
Read Carolyn's book, Understanding Disaster. It's very good.
I recommend a podcast called America Adapts, which is probably the only podcast solely focused on adaptation. Anybody else?
I'll give a quick shout out, Jake Biddle's book, which I can't remember the name of right now. What's the name of his book? The Great Displacement by Jake Biddle's book. And Abram Lustgarten of ProPublica has also a book coming out. I don't know the title off my head, but pre-order that now.
Yeah.
Anybody else?
I recommend the book Afterglow: Climate Fiction for Future Ancestors, which is a collection of climate fiction that's helping envision more positive futures, because I think we need to kind of get out of our business as usual thinking and imagine other ways of thinking about the climate problem. So fiction can help us do that.
All right. Thank you, everybody.
Good job. Good job.